Yeah, not a good spot for questions for sure.
But I'll go ahead and dig in a little bit. Good morning, March 8th, Tuesday. I'm gonna hit some prep. We had a fun day yesterday, short and everything. One thing I wanted to cover, and one reason I'm on the weekly chart, is to try to gauge big picture what we've been dealing with. Yeah, if you go back to the whole COVID drop that we dealt with, from top to bottom, it only lasted 6 weeks and took the market down 36% from top to bottom, right? 36. What we've been dealing with now, from top, I didn't grab the top. From top to bottom, we are in week 10, so lasting longer, but we are only down 13% from the highs. And what do we see over there? 34, 36%, something like that. So,
36.
so if we keep on trucking down, even to these recent lows, we're only at 22%. So if we keep on trucking down to these lows, after we made the V-shaped recovery, even to those lows, we're only down 31%. We gotta keep going into some of the COVID dip numbers to get to 36%. And back to 3,000 is 37%, if you can believe it.
Man, I mean, even the top of the COVID drop would be wild,
Yep,
let
yep,
alone that same percentage.
exactly. So yeah, we definitely have more room to the downside on ES. On NQ, it's a little more interesting. From top to bottom, it was 6 weeks again and 32%. And I'm going to even be nice and go off of this second lower high, although I should go a little further back, but we'll just go from there. We are in week 11 and we are down 21%. If we get back, we're, flirting with 13,000 being down at 21%. If we get back to about 12,000, these recent lows, we're almost at 30%. And if we get down to 11,000, then we're at that 32, 34%. So these recent lows would be a comparable correction to what happened at COVID. So we're down a little more on NQ. 21% versus what was it, like 13% on ES. So just something interesting to keep an eye on. And just like when we're going up, we're playing to recent highs. On every pullback, when we buy the dip, we're playing to recent highs. Now that we're going down, we're playing to recent lows. Came down to these, caught a little bounce. Now we're down at these. We caught bounces once, now we're back to retest. Same on ES. Came down, retested these lows, caught some bounces. Now we're back at these lows. Each pullback that we've had will set up supply and demand imbalances, and that's the targets when we go down or up, is to retest those to see if buyers are still waiting. Right? Now let's zoom on in. I just thought I'd do that real quick for fun to gauge up where we're at in this whole drop. We can go much lower. But
No, yeah, that's super important because after going down so much, it's easy to believe that like, okay, this has to be
oh
somewhere
yeah,
near the bottom.
yeah. Third Keltner's gonna save us every time. Not always. Till it doesn't.
Exactly.
But even with yesterday's selling on most things and all the indices, you'll see we are holding the lows from the invasion gap down, right? And I hate that that's what I have to keep calling it, but that's the easiest thing to call it, right?
Hmm.
So we're coming up to test making an H on the daily. ES fell pretty hard, back down below 4,200. And I've heard some folks say, if we're below 4,200, that means death for the rest of the week and that kind of stuff. We can definitely go back down and test these. We can definitely go lower. But we do have a daily squeeze that we are trying to hold up to. I also found a little micro supply zone. I mean, not necessarily micro, it's like 30 points wide or 20 points wide. But we did bounce at that, after being down so hard yesterday. 3%, I think it was. No, it was over 3% on NQ, maybe even ES. But after being down so much, futures dumped a little further, hit this zone that I went back and found. And just for the hell of it, I'll pull up the daily to give you an idea. It comes right over to here. The last, another pullback and reversion to the mean. If you look, it's from the close of this daily down to this wick. They sold down. They tried to take it down further and buyers stepped in. So here's a huge pocket of demand waiting. Now we're back to it. So just a little pointer on how some of these levels come about. So we've already bounced at that pre-market and got a very nice pop back above this daily squeeze. We have an hourly squeeze starting to set in, which I'm kind of surprised with because we obliterated all of our squeezes yesterday and had them fire down, but the hourly's starting to register again. So we do have some support down here at 41.62, key level there, this daily squeeze bottom, and this zone before we even get down to the lows from the gap down. So could easily bounce at any of these and start trucking back up to the first Keltner up and the daily means up above. After 1, 2, 3 days down, gonna start getting a bounce. Gonna try to let things settle, but I'm definitely not biased in either direction. I'm not gonna jump in thinking we have to short and just keep shorting because that's the market we live in. We will get days where we bounce, we will have green days, so gonna be non-biased and ready to play. I've got a little zone here between 41.83 and 90 that's holding us up now that we're back through it. Let's see if that will hold into open or if we come back down to the 65 to test. If we do hold 65, we set in a higher low. I'll be looking to go long if we hold this zone or this 65. To play back to 4,200 and above. Top of that hourly squeeze is by that daily Keltner. And right around 42.50. NQ. Rejected this zone. That's why we draw these little key levels and zones. Rejected right at the beginning of the day. Rejected the daily 8. And down we went through all of these key levels. There was basically only a couple of pops that provided re-entry. It's a whole day of selling, so we're getting an amazing gap up. No, we're not. I'm just joking. We're pretty much flat and a little down on NQ. But again, let's see if this daily squeeze can hold. This 13,220, 13,200. If we can hold there, we can start to push back up. We got a pre-market high to keep an eye on, around that 13,400. Let's see. And to the downside, if the 220 gives out in this daily squeeze, we do have this big old zone from that gap down, which would be making the H. Below that will be at third Keltner and starting to get down below 13,000, which starts cracking us into the upper 20% retracement from the highs. So Ruddy holding up pretty well, surprisingly. I mean, it's, basically like everything else, coming back near the H, bouncing a little bit higher, right? But overall, this daily squeeze has definitely been propping it up. So let's see if that continues. If we go down to test 1940, would like to see it bounce there and start trekking right back up to the mean, which is where the top of these squeezes kind of lie, back near the means. Ruddy will be a good gauge. They've seemed to have been rotating into it hard when they want to go up, pulling out of it pretty hard when they want to go down, so it's kind of been a early warning signal, I guess. YM was definitely trying to hold us up yesterday. At one point early in the day, NQ was a little stronger on bounces, but then after that, YM was the only thing that bounced up and tried to hold us up for a while before going back down, whereas NQ was straight down all day. So we could see some rotation into YM. If we're going to go to the upside, it's right at VWAP as we get near open, in the middle of this hourly squeeze. So we'll see if YM wants to go down and test the bottom of the squeeze and the second Keltner down and retest these pre-market lows. It's definitely going to take the whole market with it, but we do have some distance to get there. After recovering so much overnight, wouldn't be surprised to springboard from here, kind of a inverse head and shoulders, shoulder here, big old drop, shoulder here. So want to see YM stay above 32,700 for upside on the market. Apple and bananas. Hold on one sec. I might have a question over here. Oh, okay, no. Apple. Well, our trendy little trend tool pretty much has us set with some pre-market highs and lows around the 58 and 60. Going to be opening in between, a little bit closer to 58. So let's see if Apple, keeps on this trend to retest this 58 and bottom of squeeze. Yesterday, this Keltner tried to hold us up as best it could. So if we slip 58, we could retest this, or we could get as low as the next Keltner, and which will be stepping down and be close to 155, which is a very key number. But I wouldn't be surprised to see us hold up to this 158, 158 and a half, and try to push up to the squeeze. Lately, onto the upside, Apple's been trying to lead, for tech at least. Apple, I always try to preach, is the best gauge for tech. All of tech's going to follow it, so keep an eye on Apple. A little bit closer to the bottom of its squeeze today, but if it can hold 158, 158 and a half, and start pushing back through 159, could lead tech to the upside. AMD. Getting back down to our key levels, around 99, 97. If you don't remember, getting through 100 was a pain in the ass for AMD, and now we are getting right back to it. It's a huge level. If you don't remember or weren't around for it, let's go back to that weekly. We'd get there and die. And we'd try to get going again and die. And try and get going again and die. This is weekly, so we'd have 3 weeks down every time we got near it. 4, 5, 6, 8 weeks down, you know. It was a pain to get through. Then we went parabolic, now we're back. Last bounce got us up to 130. So we'll see. Do these key levels hold as we get near 100? And as you can see, I just left a couple of key numbers above because market needs to move for AMD and chips to get going again. Back down. So we are pretty much hugging that second Keltner down. It's going to step down a measured amount, but be very close to 100. Well, let's see if pre-market low will hold. I could see a slip to 100 just to try and trap a bunch of people short, hold a key level, and then start making the journey back up. Below 99.97, it's going to get ugly for AMD. And it's worth noting a lot of these names are starting to report their dates for earnings. So keep an eye on that. MU reports at the end of this month on the 29th. So we're already back into earnings season. Maybe that will be the catalyst we need to start going back to the upside. But of course, the Ukraine issue is going to be looming over us. And if you didn't, go check our news section. I already did this morning and read through everything. There's lots of good updates in there. There is one area in Ukraine where they have kind of put a small ceasefire in place. So go check that out. It's in the news section. Amazon. Back down to this key level. Again, if you want to know where that's from, we'll go back to the weekly. Key levels that kind of marked our whole breakout and back above 3,000. Well, we're back to them. So let's see if these can hold us up. If we do slip below 2,700, the last thing to save us is this little zone. Oh, fun. Biden's going to speak today. Thank you, Richie.
Mm-hmm.
Speak today at 10:45 on holding Russia accountable. Yeah, I saw a bunch of news blips that they might be using a bunch of different kind of bombs that they're not supposed to be using, and so they're trying to start stacking up war crimes against them. So we'll see if that's what he's going to talk about. But Amazon back down at this zone could provide a nice bounce if tech is going to try to lead this market back up. Want to see it hold this 2,700, obviously psychological level. 2,715, 12, I guess, is about the bottom of this zone. With that key 2,740 that we're kind of pulling up to. So let's see if we can hold right around here, make our way back to 2,800 and above on Amazon. Facebook dropped hard yesterday. I got close to that 200 pre-market and just died.
And
Yeah, down below 200, around close around 187. So yeah, they're still beating up that horse already down below its gap. So definitely not the strong name to the upside. Google got torn up yesterday too. Didn't quite make it down to the lows. It's about the second Keltner down in this 2500 level, which gets it pretty darn close to where it opened after the gap down. So, got to see if 2500 will hold. Might provide a nice bounce up to this trend line from the highs back at 2600. I don't usually cover them, but I'm going to just look in. Yeah, they look like shit like everything else. But I wouldn't be surprised for a little bit of finance rotation. And seeing a little bit here on JPM. There were some bank upgrades today. BAC was one of them. Yeah, up a little bit. And there was that news blip that MasterCard and Visa will be raising their credit card rates. MasterCard wasn't up too much. Visa was, but now it's starting to give it back. But those could provide some decent trades today. On days that they want to be strong, they can move quite a bit. So, might keep a teensy eye on them, but they're not the most fun to play, so. Moving on. Where is that? Microsoft. I rejected that 290 and closed around 278. Basically going to open flat. We do have a little squeeze down at 276 that we could go visit before heading back up. But still, you know, in the bottom of this daily squeeze and nicely above the lows from the gap. So let's see if we can hold this 277, this 1 hour squeeze bottom, and this second Keltner down to start making the journey back up. I think, yeah, in the alerts channel yesterday we saw a number of these calls like 287, 285, I think, maybe even 290 hit beast yesterday. So we'll see if they provide some opportunity. Netflix was really decently strong yesterday. In the first drop, it only fell to a point and then stopped, and the market kept going. The market kept going while Netflix bounced and held up. It even made a W and was starting to act like it wanted to break out, but then a squeeze set in and sent it back down. But relative strength-wise, it was looking pretty darn good. So, you know, if we do start seeing some upside in tech and in the market, could see some rotation back into Netflix, which was trying to be strong yesterday. Nvidia was not trying to be strong yesterday. It was an immediate short, held up for a bit, and then another great short. I do believe there were some folks hitting the 215s on the first drop, then it made it through 215, close to 213, not sure. I think maybe one or two people did have some paid runners, so hell of a trade there. I think the 215s might have been off base, but I'm not sure, I wasn't in them. But overall, pretty much going to open about flat. Nope, down just a teensy bit. So, let's see if it can hold this 210, this second Keltner down, while AMD holds that 100. If they both go down, AMD loses 100, and Nvidia starts to lose 206. They'll start to fall a little bit faster, and Nvidia will get to 200, AMD maybe below 97. So something to keep an eye on. If they can both hold, we can start making the trek back up. And I can't recall. I do believe a couple of these calls were hitting VSON in the alert channel towards the end of the day. So we'll see what we get. Qs. Let's see. These 335s were amazing yesterday. I think they went like 1 to 5 or something. do have a tiny little squeeze popping up down at this 320. So if we do go down to revisit the pre-market lows, that 320 and a half to 320 might hold us up. But we do have the lows from the gap down around that 317. If we can start to push, we'll get back above what was left of this daily or 4-hour daily squeeze. If we can get back above that 326, we'll be back above that daily squeeze and can start pushing back to 330. Shop was an amazing short yesterday, from 600 down to about 555. It's weak as hell lately, but it does have a very tight little squeeze here and about a 20-point range. So we'll see if that keeps shop kind of range bound while that squeeze forms out more. SPX, what a day yesterday. These 4240s, where were they? That would be right about here, yeah. 4240s opened at Beast. Oh man, I can't remember how much it was. $2 or $3, something like that. I don't know. They ran to like 50. And I hit this a number of times playing the 4200s and the 4190s on the way down. One of them was like a 2 to 6, so lots of fun. We're back at these levels. Let's see if this 4180 can hold us up. We're not really gapping down. Now we're flat. So let's see if this 4194, 85, and 79. So 80 to 90. Let's see if that can hold us up and start to send us back above 4200, back to 4250. Spider. 1 hour squeeze, bottom of which is around 415, top at 424. Let's see if this 417 can hold us up, kind of where we based and popped. And basically that's shoulders of this inverse head and shoulders. So let's see if the 17 can hold. Start to send us back through 22 to 24 to 26. Tesla. I know a few folks shorted that yesterday. Hit this 865 and died right on down. Bounced at 792 and coming back to 800. So if 792 to 800 can hold, this can start making its way back up. And yeah, daily liquidity is all centered around 850, so that'll be the target to get back to. And last but not least, VIX. So we had that gap down, which sent us way up above the daily 8. We fall back to it, we bounce. To it, we bounce. To it, we bounce. And we are in an uptrend on VIX. And these squeezes are getting smaller and smaller and closer to breaking out. So, 37, going to be very, very important. It's what stopped us last time on that gap. And we are nearing it as we are getting back to the lows on most of those names, right? VIX is getting back to test that point that it gapped up to. So, if we break out above 37, we could really see some downside kick in and some panic selling and get above 40, right? If we reject 37 today, if we get to 37 and reject, it could set up some very nice longs as VIX gets back down to the daily 8 and maybe even below to test the daily 21 and 15, which are back at 30. So now we have some room on VIX to drop and on a lot of names to get some good upside back to the means. So we're basically in a game where all of the indices and all the names we watch rejected the daily mean, and fell down. VIX bounced at the daily means. So we'll see. Can VIX reject? Can we hold up our lows? And everything start making its way back to means? Or do we continue the trend of VIX going up and the market going down? I'll go ahead and